Welcome back, guys, to another episode of Profit Services. My name is Fabian Yanyalo, where I actually help businesses around their cash flow, improve their cash flow, and make more money through profit. Today, the focus is going to be all about profit. And I want to ask you a very, very simple question. Do you really know how well and how much profit your business is really making? Now, to know this, what we actually do here at Profit Service is we do a break-even analysis. A break-even analysis is a very important tool analysis that we use because it makes us understand how many units our business needs to sell, how many subscriptions they need to have each month, how many widgets they need to produce, manufacture, how many widgets they need to distribute, how many people need to come through the restaurant. It makes us understand how many of these need to happen for the business to break even. So this is a break-even analysis. As you can see, there are some really important aspects inside a break-even analysis. First of all, there are your fixed costs, and as you can see, your fixed costs are those costs which don't actually move. Then there are your variable costs, and with variable costs, these actually will move as sales increase. So there's your variable costs, and as you can see that as your revenue is increasing, your sales are increasing, so is your variable cost component. So your fixed cost plus your variable cost, this is going to come to your actual total cost. And as you can see, the break-even point is basically where your revenue actually matches your total cost. And this is really important because once you know this, then you know how many units need to sell to actually break even. And then anything you sell above this is pure profit. Anything you sell below it means you're actually making a loss. One important aspect I want to talk to you about within this break-even analysis is what we say is a contribution margin. So what a contribution margin in layman's terms, all a contribution margin is looking at what your sale is and then deducting from that your variable costs. So sales less your variable costs equals your contribution margin. So if we take an example to make life a little bit easier, if we say that each unit you sell is $20 and the variable cost to each unit that you sell is $12, that means that this is going to give you a contribution margin of $8. Now, why is this so important? It's really important because then you know that once you hit how many units you need to sell to break even, and let's say it is 5,000 units a month that you need to sell to break even, then every unit after that, you're going to make a pure profit. And in this example, it means $8 per unit you sell. So if you sell an extra 1,000 units for that month above the break-even point at a contribution margin of $8, that means that those 1,000 units by $8 means that you'll have a profit of $8,000 for that particular month. Once again, my name is Fabian Yanyalo from Profit Services, and we always help businesses maintain a sustainable cash flow and improve their bottom line. If you did enjoy this video, feel free to share it with other business owners. Alternatively, you can obviously leave a comment, ask any questions, and we will get back to you. Thank you, and bye for now.